Hello everyone, and welcome back to the channel. Today we're taking a deep dive into Palantir Technologies, better known by its ticker symbol PLTR. The stock is currently trading at around $123, and investors are closely watching the company's upcoming earnings report. In this video, we'll examine Palantir's business model, revenue growth, profitability, valuation, risks, and long-term potential to determine whether the stock is still worth buying. Palantir is one of the world's leading artificial intelligence and data analytics companies. The company develops software platforms that help organizations collect, analyze, and manage enormous amounts of data. Its three most important products are Gotham, Foundry, and the Artificial Intelligence Platform, or AIP. Gotham is primarily used by military and government agencies, while Foundry helps commercial businesses improve efficiency and decision-making. AIP combines advanced AI tools with real-world business operations, allowing companies to automate tasks and generate valuable insights from data. Palantir generated approximately $4.48 billion in annual revenue, demonstrating the company's ability to expand rapidly within both the government and commercial sectors. The growing adoption of artificial intelligence has created tremendous opportunities for the company. One of Palantir's greatest strengths is its strong relationship with government agencies. Long-term contracts provide stability and help protect the company from economic uncertainty. At the same time, Palantir continues to expand aggressively into the private sector, which could become an even larger source of revenue in the future. A few years ago, many investors viewed Palantir as a high-growth company that was struggling to achieve profitability. However, the situation has changed dramatically. The company now reports annual net income of approximately $1.62 billion, while earnings per share have reached 96 cents. This is an important milestone because it proves that Palantir is capable of turning strong revenue growth into substantial profits. As operating efficiency improves, the company's profit margins may continue to increase over time. Despite its impressive growth, valuation remains one of the biggest concerns surrounding the stock. Palantir currently has a price-to-earnings ratio of approximately 138, which is extremely high compared with many other technology companies. A high valuation indicates that investors expect exceptional growth in the years ahead. While that optimism may be justified, it also means the stock has very little room for error. Any disappointing earnings report or slowdown in growth could result in significant price declines. Investors are paying close attention to Palantir's next earnings announcement. Analysts expect earnings per share of approximately 34 cents, while revenue is expected to reach around $1.81 billion. If Palantir exceeds these expectations, investors could interpret the results as confirmation that artificial intelligence demand remains strong. On the other hand, if the company fails to meet expectations, market sentiment could quickly turn negative. This earnings report may become one of the most important events for Palantir shareholders this year. Palantir possesses several important advantages that separate it from competitors. First, the company has developed deep relationships with government organizations that would be extremely difficult for competitors to replicate. Second, its software ecosystem creates high switching costs, meaning customers are likely to remain with the company for many years. Finally, the rapid expansion of artificial intelligence provides Palantir with an enormous growth opportunity that could support revenue growth for the foreseeable future. Every investment involves risks, and Palantir is no exception. The company's valuation remains very expensive, and increased competition in the artificial intelligence industry could place additional pressure on growth. Furthermore, Palantir's beta value of 2.01 indicates that the stock is significantly more volatile than the broader market. Investors should therefore expect larger price fluctuations, especially during earnings season. Overall, Palantir remains one of the most exciting artificial intelligence companies in the market today. The company has strong revenue growth, increasing profitability, an expanding customer base, and a unique position within the AI industry. However, investors should also remember that high expectations often come with high risks. Long-term investors may consider gradually building a position, while short-term traders should pay close attention to upcoming earnings results. What do you think about Palantir stock? Do you believe PLTR can continue climbing higher? Or is the stock currently overvalued? Let me know your thoughts in the comment section, and don't forget to like, subscribe, and turn on notifications so you never miss another stock analysis video. Thanks for watching, and I'll see you in the next one.